Hello everyone. This is going to be a small video in which we're going to discuss the recent activity on Nifty futures that happened on the 20th of January, if I'm not wrong. That is the Friday. Okay, so we're just going to discuss a small trade idea using some of the concepts of the footprint, as well as we're going to look at a little bit of volume profile so as to get the context before we take it. Before we get into how to take a trade using order flow. So primarily footprints are used to get a granular feel of what is happening within the bars. This, for example, is a 5-minute candlestick and a footprint chart, and the activity that is here is that has taken place in a 5-minute bar. So this is the 20th of January, Friday. So just to get things in place, this one on the right hand side we have the volume over here, and on the left hand side we have delta. So unlike you're used to seeing, wherein you have the market buy orders on the right side and the sell orders on the left side, this is a little different, wherein you have the volume on the right side and the delta on the left side. You can change it according to you. I tend to use both of them. So this is the general one that you use, and this is the one that I have just modified a little bit to get a concept of, to get an overview of the volume that is taking place or building up during every separate bar. Okay, the other things that we have on the chart is down below we have the delta, up we have the delta and the volume being shown on top and bottom, on top of the bar rather. On top we have the COT low, and bottom we have the COT high. What are they? I have discussed in one of my previous videos. You can go and have a watch over there, and we will try and use this concept also a little bit when we discuss a trade idea that happened on the Friday. Okay, so and the trade idea that we generally keep discussing in the videos, they do occur at regular intervals. In fact, if you're an intraday trader or a scalper, they're of really great help, and you can use it as and when the opportunity presents itself. Okay, so moving on, before we enter into this footprint or into the 5-minute candles and go deep dive into the footprint and the activity that was taking place there, it is always a good idea to do your homework and have your reference levels or zones marked where you're going to observe the footprint charts even more deeply. Okay, so you can observe and see how the buying and the selling activity has been going on in the past few days, few minutes, few hours, whatever, so that you get a feel of the tape that is going on, because this can be really overwhelming, the amount of activity that keeps on happening, and it is at a fast pace, mind you. So to make sense of it, if you're a beginner, is a little difficult, and you might end up taking trades that are unnecessary. So it is always a good idea to have the context in mind before you get into a trade, and what has been happening in the past few days. So let us first look at this chart. Now this is a basic volume profile chart with a candlestick. You can call it price action, and just over here is the volume profile. The purple is nothing but the value area, and the magenta is the outside the value area. Okay, so that is not, don't get into the fancy things. In this video we're just going to discuss pure price action and with a little bit of volume profile in it. Okay, so this is the day that we have to discuss. So let us first see, when we get into the day, what was actually happening before that day. Okay, so it's not so difficult. You can see the market was in a range for 1, 2, 3, 4, 5. It tried to break out a little bit for two of these days. I'll just use the marker here. Okay, so these 2 days where it tried to break out and failed, and this happened in the later part of the 13th on Friday again, and it did not break out at that point. The breakout was from this level. Okay, sorry for the not being a straight line. The second day consecutively it tries and fails, and from failed moves come fast moves. You might have heard that. So this is what happens. Okay, now the point to note here is that the market was in range. You don't have to be too inclined or biased towards anything. Even if the fall is rapid, it is still in a range. Okay, and it even couldn't break this part. I'll just mark this. So you have to just keep these nuances in mind when you're this part. Okay, it even couldn't enter this zone which it had broken out the previous day back. It completely rejected and started, I mean, even slowing down in this part. Okay, just a minute, this part. Okay, so it's not even breaking this. So this is a first clue that if it has to break, it has to go down first, at least test this, and then it can go down. So the context behind is that the 4 days previous to, I mean, the 6 days previous to the day we're going to discuss, we had a ranging market. Okay, let's delete all this. Now let's move further. Okay, now it finally breaks on the 17th of January. It moves up, and again, what does it do? The markets these days are not trending to one direction. You would have noticed it forms a sort of a good volume node here. Okay, now you can use this for future also. So if the market is to go above this, only then can you expect a trending market, because all these guys would get trapped. This is futures, of course. So, and only then would you expect a sustainable move. You cannot call it sustainable, or good trending move which you can capture. Okay, whether it be scalping or a swing trade and so on. So the other thing that just a minute, let me delete this. The other thing that is of note over here is, look at this part. When the market breaks this part, okay, so on Friday, that is this day that we're discussing, okay, this day is the first time in the last 2.5 days that the market has gone back into the 3-day range that we had here. Okay, the market breaks 3 or maybe more that we were just discussing. It breaks out and it gets back into this range. So what is of I mean, interest to us is, this is another point that is a good volume node, and below which we do not expect the market to go down. You can even move it a little further. So it would be this low that we do not want to break. That is the Friday's low. That is for moving forward. Now coming back to what happened on Friday. So this day opens within the last 2 days range. Okay, it rejects the area that it just broke out of on that is this day. Okay, it broke out of the previous range on the Wednesday 18th, right at the open. That is the first 30 minutes. It makes a, I mean, confident move up, giving an I mean, a hope or an indication that yes, we might get a trending move of about 100-200 points, or maybe 300 points, equal to the range that was within which the market was trading for the past few days. Okay, now it moves, and what happens the next day is of really great interest. Is this low volume node starts acting as a resistance. Okay, now Friday when we come in, we have this zone marked. Of course, that the first thing that the market needs to do, or the auction needs to do, is break this zone so as to target this part. Okay, the first part that we would have expected to be tested was the POC over here, and the second part was this one. Okay, so when the market opens, if the market is to break this range, is to be bullish, these are the zones or the references that we have in mind, of which if there is a sort of consolidation, we take a breakout, a trade on the breakout, and if there is a rejection, of course we can try and use the footprints to get a fade or a reversal trade, as many call it. Okay, but what happens now, another thing that you need to you can have it in your mind is this, that if the market is to break out, okay, and you need a confident breakout to take a scalp or any intraday trade, this should happen within the first 30 minutes, or in market profile we call it within the initial balance, that is the first 1 hour. Okay, now the range on this day, on Friday, or rather Thursday, was very, very small. If you see, it is hardly 100 points. Now when the market opens here, I do not even want to see the market floating around in this area for even 1 hour. I want it to be out within half an hour, because we have this zone, as we just discussed, which might act as a resistance zone. So I wanted the market to just move away from here and get all these guys. The move will come only when all these guys start getting trapped. Okay, these ones that were where the volume developed, and these ones, okay, all these guys start getting trapped. But what actually happens is the move is maybe it is a little fast in the first 1 hour, in the sense that it goes down in the first half an hour or so, takes a whipsaw up, and it starts to fade. Now when this happens, I know that the market has actually moved almost again, if you see, 100 points up here. Now it can I mean, it's again odds, it can break out, but I feel at that point when this happens, the odds of this happening, I'm sorry for that, the odds of breaking out after 11 become a little lesser. So what are the two outcomes that have the highest probability of playing out? Is either the market tests this zone, the top of this zone, after breaking out from here, and then maybe a fall down, and so on. But to come down and move out of here another 100 points is very, very, the probability is very, very low, and on a Friday even lower is what I think. Okay, so getting deeper, so why did I explain all that? So is because we were getting the context out of the way. So the trade that I'm going to discuss is a short somewhere in this area, okay, after the market fails to move out. So the other the balance rules come into play. The other outcome that is going to happen if this is failed is we can see the market test this low in the very same day. What happens eventually is it breaks the low, but that is not what our target is. So the first thing that we can expect when this fails is a test of the VWAP followed by a test of this low, okay, and maybe this low first, and then this low first, and then so on. So we will just see what happens and get into the footprint chart thereafter. Okay, so let me first delete this. So we'll have these zones marked for us. So as we discussed, the first point where we would have expected it to go down is, again, the day's low was exactly almost similar to the previous day's low, and the other one is this one, okay, and then this is the high of the day, which we didn't expect it to break at least till the later half of the session. So when we have a ranging day like this, what we are actually expecting is something like this to happen. Okay, this exactly like this, it goes down, comes up, goes down, comes up, and something like this. Okay, what eventually happens is something nobody could have expected, or maybe that's not what I am expecting. I'll come to the part where do I think it is still a market for shorts? No. Why? Because you see most of the value that has developed in this area on this day is all over here, okay, is all here. Yes, there is a little bit of volume at the close that does happen. So we'll discuss how to go about it for Monday, that is tomorrow. Okay, so now our trade idea becomes, where do we take a short when this fails, okay, and how do we confirm it? So this is the background. This is what you have to do before you actually enter a trade. You cannot just go into the footprint charts and decide I'm going to trade here. Okay, so let's get into the footprint chart quickly and see what we have there. Okay, so this is the 5-minute footprint chart. So let's get straight into the time. It was 10:40, and let's come here. Okay, now this is the high. So like I've used in my previous videos, this is another very good tool that I like to do. This is the imbalance support and resistance zones. They're really, really good help. Okay, so when we come here, now that we are expecting there might be when do we start looking at it carefully is when you see this, of course the stops got triggered, and this is a no, the no orders got triggered. So there's a huge probability this is something like an anomaly or an imperfect structure, which does generally get tested once before the market decides to do something. So what if the market had to trend that day, like we were discussing? The least that should have happened, and when it came here, it should have just tested this area and moved back. But what does happen is it comes back and it forms a sort of a volume node here. This is the reason I have the volume here, and this is negative delta. So there is selling coming in at this point. Now it should have been absorbed and taken, the market should have rallied back up. So one of the other things that I've kept discussing in my previous videos is you should first see the aggression on one side, or an accumulation of sorts followed by an aggressive move. So for example, if it is to be bought, or the market is to be trending up, the first sign is they absorb all the sellers. Okay, this is the one. And the second sign is the market buy orders need to come in. The other sides needs to get aggressive for the market to again start trending up. So after all this has happened, this should, even if the sell orders are here, it's fine. It doesn't mean you go short here. This is not the only reason you go short here. But after this, if you need to see a long, the market should have not gone here. Even if it goes here, it should have popped up early, and you should have seen good deltas and COT lows, good high COT low values. But what actually happens here is, and that should interest us, is the first time the COT low we see over here is negative over here. Okay, and the COT high is 79, high, hardly anything. That means the selling from this part is there's no selling actually, but it is, I mean, you can call it even Stevens at this point. On the next candle, the COT low is certainly negative, the COT high is also negative. Now there is, and you start looking at the delta as well. Okay, same thing here. Okay, same thing here. This is too long a time. It is 1 2 3 4 20 minutes. The market has just creeped back into the range with good amount of markets sell orders. They should have all been either absorbed. This should have stopped. Even if all these values were negative, it should not have kept going down. So that means new buying or new buyers are not interested. There is nothing that we can see from here that the buying is going to step in. So after this point, actually this is the great point of interest where you should start getting into, okay, I can go in for a short. The context is with me on this. It can be a ranging day and it can go down. So before you take a trade, so this, we'll get into the 1 minute chart in a second, which we generally like to do. Now if we end up taking a trade somewhere here, even on this point, okay, at this point, so our stop loss of course will be the top, this POC. We'll just discuss it on a 1 minute candle as well. Okay, so we need not give the high of the day as the stop loss, because if it breaks again, there will be stop losses that will be triggered, and there's no point going all the way up there, as I keep discussing. So this is the maximum that we give. Okay, this is 167. We'll get into the 1 minute chart and discuss over there if we can cut down even further on this. And the first target of course is can be your VWAP, or what I generally tend to do is have the imbalance zones as my targets. Okay, so when I take a trade, so this is my target, so it's about 135 or so, just above the VWAP, the imbalance zone. So getting into the 1 minute chart, we'll just have a look at where exactly we could have taken a trade of that. Okay, so this is the area, so the imbalance zone is there, and let's just mark it with a short long tool. Okay, so this is the place where we decided to take a trade off. Okay, because the market, I think this is the one. Okay, this is the one. So let's get the short long tool out, and let's say we took a trade somewhere here, not even there, here. Okay, and our stop loss need not be more than this, because if this breaks, we are obviously heading higher. And the first target is, let's get into our, is 135. Okay, so let's, oh sorry for that, one somewhere here. Okay, this is our target. So what is the risk reward here? I think it is more than what 1:1. In fact, we would not even have this. Somewhere here should be a stop loss. Okay, if it enters the range. So this is about just more than 1:1.5 or 1:1, and this is a scalp that we discussed. The second target that we have, if you're an intraday trader, and which has a high probability of hitting, is of course the VWAP. Okay, now in a ranging day, that is what you should aim for. The reference zones that can happen, especially when you're expecting the market to move up and down. So if we look at here, we took a trade somewhere here to get a holistic view. Okay, we took a trade somewhere here, and we are expecting, or maybe even higher somewhere here, yeah, and we're expecting the targets to be 135 somewhere here, okay, and the VWAP is the second target, and the third and fourth target, if you actually willing to hold, are the ones that we just discussed, this and this, okay. So that is how you can actually plan your trade with proper context using footprint and order flow charts. Okay, so hope this video was of some help to you. Before I finish off, I had a small announcement sort of a thing. I have opened a Substack channel where you can it's a subscription where you can find my market plan for the days. I do not post there I mean daily, but once or twice or thrice a week, whenever I find time, I post my market view over there. So you can certainly subscribe to that part, so you keep getting the newsletter from there. I will leave the link below in the description part. Hope this video was of some help to you. Until next time, bye bye.